The Property Bulletin by London Property, the home of superprime.
High net worth Americans are increasingly eyeing the UK, particularly the Cotswolds, as a safe haven amid political uncertainty in the US. With Trump's second term underway, we're seeing surging demand for prime countryside homes. UK citizenship applications are up 26% year on year. Buyers include tech entrepreneurs, finance execs and academics. Motivations: asset security, lifestyle, and a long-term exit strategy. Luxury brands, private clubs and lifestyle businesses are following this wealth migration. For advisors, agents and developers, this presents both a challenge and an opportunity: how to support and serve affluent clients seeking UK relocation or investment. More people over 50 are becoming first-time homebuyers, often using pension savings or inheritance to fund deposits. Driven by high rents, health concerns, remote work and a desire for long-term security, many are choosing to buy later in life. Over 50 first-time buyers have increased by 30% in 5 years and are expected to make up 5% of the market by 2030. For this growing group, owning a home is less about investment and more about stability and control in later life. British real estate is currently offering attractive opportunities for passive income investors, with nearly all UK-listed real estate investment trusts, REITs, trading at a discount. This includes Warehouse REIT, which recently rejected a takeover offer and still trades 15% below its net asset value, while offering a 5.9% dividend yield. High interest rates have driven up borrowing costs for REITs, causing market-wide pressure, regardless of financial strength. However, stronger REITs like Warehouse continue to pay dividends, refinance debt and report rising rental income. With interest rates beginning to fall and property values recovering, now may be a smart time for investors to consider quality REITs as part of a long-term income strategy. Sales of properties over $10 million surged 30% in 2024 as the world's wealthiest buyers went on a luxury real estate spree, according to Knight Frank. A total of 558 ultra-prime deals were recorded, with Dubai leading the boom, thanks in part to its Golden Visa program. New York and Palm Beach also saw major growth, while Hong Kong made a strong post-COVID recovery. In contrast, Singapore and London saw a slowdown due to new foreign buyer taxes and potential non-dom regulation. Analysts say global wealth creation is still fueling demand, but new tariffs and economic uncertainty in early 2025 could shift momentum in the months ahead. With capital gains tax revenues falling from £14.5 billion to £13 billion and the scrapping of the non-dom regime, the UK government is under pressure to rethink how it attracts wealthy foreign investors. Knight Frank suggests a UK investor visa, similar to the proposed US Gold Card, could offer a politically palatable solution. Amid fears of a Wexit wealth exodus, proposals like a tiered tax regime for foreign investors are gaining attention. Meanwhile, prime central London property continues to lag, down 3% since 2020, while outer London rose 8%. For global investors, that disparity may present a buying opportunity, with or without a visa scheme. Illegal short-term lets in London are rising sharply, with over 50% of 117,000 listings in 2024 breaking the legal 90-night annual limit. Local councils struggle to enforce rules due to lack of data. A new report shows that just 1% of hosts own 25% of listings, pointing to increasing business involvement. Income from short lets now makes up a significant share of rental income, 18% in Westminster alone. The government is considering a mandatory national registration scheme and greater enforcement powers for councils to curb the issue and ensure fair taxation across the sector.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the superprime property market.